Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me today is Vinny Motiwala. And viewers, this is the show where you get answers for all your stock related queries. In a short while from now, we will connect with our experts and you get a chance to connect live with us. But before that, let's have a look at what the markets are up to. So Cheryl, I beg your pardon, Vinny, feels like that the markets didn't like the rate hike caused by the FOMC and we are just getting weaker tick by tick.
Absolutely, just getting weaker tick by tick and nothing exciting because yesterday also the markets were not doing anything great. Today also when you look at it, 19,750, it's below those levels as of now as well, almost at the day's lowest point. Nifty down almost 0.5%, Sensex down even 0.5% as well. And look at what the mid cap and the small cap space is doing as well. Let's look at that because that is something to watch out for as well. Nifty small cap is down almost 0.1% and mid cap also down almost 0.1%. So yes, still performing better than the broader markets, the Nifty and mid cap and the small cap, but still there's pressure coming in over there. Apart from that, the sectors that are managing to hold on to some bit of a green is the Nifty Media today as well as the Nifty Realty, still holding on to some bit of a green. Other than that, all the sectors are falling in trade. Nifty Auto among the top sectoral losers, down more than 1% in trade. Nifty FMCG too, down almost more than 1% in trade as well. So clear weakness that we're seeing coming in terms of the markets. Nothing exciting there as of now. But you know, there are some individual stocks also that are seeing some bit of a move, positive move. That is HPCL, REC and Bandhan Bank, which are holding on to some bit of a gain there, Shrishti. But otherwise, other than that, you know, there's clear weakness coming in the markets today.
Clear weakness in the markets today, but one pocket, Winnie, is showing excitement, and that is the EMS space, electronic manufacturing companies. And on to the buy now, sell now lens, we're going to be focusing on that as brokerage firm Morgan Stanley maintains outperformance stance on a couple of electronic manufacturers. But what is the rationale behind the ratings? And in that note, which counters are in focus? Let's get in all those details from our colleague Anisha joining us right now. Take it away, Anisha.
Initiation that Morgan Stanley has done on Keynes as well as Syrma SGS, and it's happened with an overweight rating because they're quite positive about the whole sector. The target price for Keynes is around 2,440 bucks a piece, and for Syrma it stands at around 671, so a decent upside from the current level as well. Remember, of course, all of these manufacturing and the EMS plays have seen a massive run up this year. There have been a lot of triggers leading to that. PLI schemes were announced last year, which has added a bit of fillip to these stocks. There was a lot of efforts made for substituting the imports with localization, whether it's laptops, tabs, etc. And all of that had given another leg up to some of these names. Today, what Morgan Stanley is talking about is the overall potential that is there of the electronics industry in India. In fact, they're saying that it has the potential to grow at a revenue of almost 21% from FY22 to all the way to FY32, and they are expecting that the electronic manufacturing industry will reach the mark of $604 billion by FY32. So a rapid growth of almost 20% per year for the next decade or so is what they are penciling in. A couple of factors leading to that, of course, you have the domestic growth, which is very strong. You are seeing a lot more financializations of saving, the aspirational spends coming in. There's a larger population available in terms of the workforce on the supply side. It's cheaper labor force as well, and that means there is a lot of potential for exports as well. In fact, if you look at India's vision of become a $5 trillion economy, what Morgan Stanley is saying is a large part of it is going to come from offshoring, which is going to be one of the big pillars. So earlier offshoring was only limited to software as we know it, but now it's expected to pick up in manufacturing as well. So overall, a very positive note coming in. They do highlight that they prefer the B2B players, which is Keynes and Syrma, versus Dixon, which has a bit of B2C as well, perhaps because that's why they have an underweight stance on Dixon. But as far as Keynes and Syrma go, they are quite positive.
Absolutely. As far as Keynes and Syrma go, they're quite positive. Dixon is a bit what they are underweight on. But let's continue this discussion with our experts today. We're joined by Kunal Bothra, while also we have Rajesh Agarwal joining in with us. A very good morning to you, gentlemen. And, Rajesh, I'm going to come to you. Now, we have already seen, look at the run-up that we've seen coming in Dixon already over the last couple of years. Keynes, Syrma, even Avalon Technologies, which is amongst the newly listed companies in the last 6 months, that is also seeing a good up move as well. Fundamentally, how are you seeing these stocks? Obviously, there are a lot of positive triggers. Morgan Stanley is saying that 20% growth is expected to continue for these companies over the next decade almost. Is that something you are penciling in? Could we expect this run-up that we are seeing to continue? What is your stance on this?
Good morning. as far as these EMS companies are concerned, they have bright future ahead, no doubt on that. The PLI scheme, the contract manufacturing thing, the run-up, the kind of demand increase we are witnessing in white goods sector, and not to forget the kind of focus of the government in Make in India thing, Atmanirbhar Bharat and all those things. That's giving push to the localization of the market. And recently we have seen some ban were introduced on import of laptops and all this again added to their future. The domestic growth is up, and spending by individuals have gone up like anything. They are spending, buying iPhones and laptops and all those things. So these all things add to the positive side of these companies, and maybe in future they can even go for exports. But the fact remains, valuations are on a very higher side. If you look at Dixon or EMS, they are trading at valuation of 3 digits, and that's quite high, I would say. One should wait for making an entry for long-term investment, but for a short term, I think trading opportunities might be there. Except for Syrma, we don't think any stock at this point of time is good for investments.
Okay, so not looking that attractive from the investment perspective, except for Syrma SGX, because the valuations are looking attractive, but for the long term, valuations are not looking that attractive. But if we look at the long term, then definitely all these counters do hold an opportunity for growth. But Kunal, any trading opportunity that you are spotting in all these 4 names that are related to the EMS? Morgan Stanley is quite bullish on all these counters. So any stock that you like at this point in time?
So I'll agree with Rajesh over here. Good morning, first of all, to all of you. So my sense is that Syrma SGS, Canes, and Avalon Tech, these stocks are extremely overbought in terms of the charts, and these stocks have not seen any major correction. But on the other hand, I think Dixon Tech is something which looks attractive. I think the stock has also given an 8% or a 10%, 8% odd correction from the recent swing highs. The chart patterns have been very bullish. The stock has confirmed a breakout of an inverted head and shoulder pattern. It's still significantly off its 2021-22 highs for itself. So I think on that aspect, I would probably expect Dixon Tech to be a better stock to initiate the trade in this sector. But I think most of the other stocks like Canes, etc., these stocks are still into a higher territory in terms of price range. So you have to wait out for a significant correction. At least a 10% correction, 15% correction could be a good starting point for these stocks from current levels.
Okay, so wait for a correction to enter in these names, but Dixon Technology is looking at as a decent bet from trading perspective, as well as Syrma SGX you can look at from the fundamental point of view. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. As we come right back, it's time to start taking all your stock-related queries. So stay tuned and start writing to us. Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. Viewers, remember you can connect with us live on the WhatsApp number that will be flashing on the top of your screen in a short while from now, and you can also write to us on our Facebook as well as Twitter pages. We will try to take as many queries as possible. And on to the show today, we have Rajesh Agrawal as well as Kunal Bothra to guide you better. And moving on and taking the first query then, and this query is for, let me take it from you, Kunal. This one is from Balan, and he's saying that is this a right time to book out profits from United Spirits, where he's having 30% profit right now, as well as Kajaria Ceramics having 15% profit in this counter. So what will be your advice, and rather make a switch to Vaibhav Global and MCX is the additional question.
So Vaibhav Global I don't track, so I'll probably skip that in terms of the list of stocks which you're asking. But I think for United Spirits and Kajaria, these are relatively slow moving stocks. I think Kajaria has already gone through a 10% correction from 15, 20, 30. It's now come back towards 1300, 1350 mark, which means that more or less I think the major part of the pain could be out unless the market gets into a further leg of a sell-off. Only that could be a concerning point. And even if that happens, I think the other investments which you're looking to park money into, even those stocks may get into a correction. Kajaria, I think, actually could be a good bet at current levels in terms of a contra buy, given the fact that the stock has already corrected. United Spirits, you can look to book out profits over here because I think the stock is somehow getting into a a saturated zone. It's not that the charts are weak, but then I would probably sense that the stock may just consolidate or go through a time-wise correction for some more time. So I think that would be a good strategy to book out profits. Other names which you mentioned, I think MCX could be a very good buy. My sense is that the stock is getting into a very big breakout mode, but I think your time frame matters over here. So if you are looking at least a 6 months or 9 months kind of a time horizon, then I think MCX makes sense to bet at current levels.
Okay. Let's move on to the next query, and this one is from on Chambal Fertilizers and Chemicals, Rajesh. We have Ravi from Hyderabad who's holding 250 shares of Chambal Fertilizers at 405 rupees since April 2022. Should they continue to hold this or maybe look to sell it? What is the fundamental view on this?
See, we are bullish on the fertilizer sector as a whole with the government focus on rural economy. I think these kind of companies, fertilizer and all, will do well. And not to forget the kind of food inflation we have witnessed in the recent past, and that's again going to help these companies because more focus will be on agriculture, and so one can continue to hold with a target of 320 rupees in the next 6 months or so.
Target of 320 rupees in the next 6 months, and even Sunny, our Twitter follower, also had the similar query. So hope he also gets the answer. Moving on to the next query then, and Rajesh, I beg your pardon, this one is a short-term view. So Kunal, what's your view on APL Apollo Tubes? Hemanta has bought 40 shares at a price of 1632 rupees, and he also has Triveni Turbine, 100 shares at a price of 432 rupees. Wants a short-term view in both of these?
Triveni Turbine seems to be a better stock, at least in terms of the way many of the related counters or stocks have shaped up. I think the stock has given a recent breakout. Even post the breakout above that 450 mark, the stock has not fallen much. So I think it's just consolidating for the last 3 days. Typically, these kind of stock prices, they go through 1-2 days of a bit of intraday correction, but then the stocks, they also recover quite smartly. So I think I would probably expect Triveni Turbine to get into a breakout mode. Maybe if the stock corrects and say comes back towards 410, 415 mark, that could be a point where you will look to average. So you'll have to wait out for that intraday dip for Triveni Turbine. APL Apollo also, on the other hand, the stock has gone through a very gradual correction from 1800. The stock is already at 1600 mark. Indicators are not yet oversold for APL Apollo. So that's the only reason why I would probably expect that you might see some bit of more drag rather than a sharp correction into the stock price. So maybe wait out for another couple of days in case if the stock dips down to 1550 odd mark or 1500 levels. Gradually over the next in a few days, that could be a good zone to buy back APL Apollo.
Okay. Rajesh, the next query is from Mr. Singh from Pune. This one is on Uniparts India. They want to know how is it looking fundamentally if they want to enter the stock right now and hold it for a period of around 12 months or a bit more on the long-term side. What is your view on Uniparts?
See, the fundamentals are good. The company is doing well. One can continue to hold for a long period of time, but then there are better options available in the market. Why go for this? You can have a better auto ancillary company which are doing very well, like G. Balkrishnan or FIM Industries, even Talbros Auto. So they are better names to go for.
Rajesh, since you're talking about the auto ancillary space, the next query is on Samvardhana Motherson. Deepak from Kerala wants your view on Samvardhana Motherson and wants to know, can he enter at current levels and any target price for the same?
This for me?
Yes, Rajesh, for you.
Yeah, one can buy this. This company has been doing well, doing acquisitions all across. It has gone for a very long phase of consolidation. And I think it's time it starts moving up. And the fundamentals are very strong. So I believe that in the next 1 year or so, maybe 20% up move from the current market price is quite possible.
Let's move on to the next query. That's on MRPL. And Kunal, this query is from Rajesh Maheshwari from Indore. They have 500 shares at an average price of 73.6 rupees per share. What is the short to medium term outlook you have on MRPL? Should they actually stay put or maybe book some of their profits right now?
So you can stay put with the stock price. The stock is nearing a resistance, I think 97.5 to 99.5. This is the resistance band for MRPL. The last time around, which is on first week of September, I think the stock took resistance over here, corrected to sub 90 levels. I think 85 was the level which was hit for MRPL in the spot. And now the stock is back towards 95, which means it should retest at 99 levels. Now the question is Whether the stock will break past above 99, that's very difficult because that will depend on cumulative factors, the market setup, the risk on face, the potential breakouts, the volumes for the stock price, etc. But I would suggest that give it maybe another couple of days, see how the momentum shapes up, whether the stock is able to surpass this level of 97.5 to 99.5. If that happens, I think the upside potential could be significantly higher for MRPL. So as of now, I would suggest a hold, but keep it under a watch closer to that resistance band.
Okay, Kunal, the next query is on Bank of India. Sushil Kumar has entered into this particular counter 2 years back from a price of 57 rupees, almost a doubler for Sushil at this point in time. So good time to book profits, or he should continue to ride the rally?
So I think congratulations, because I think you managed to time the stock at almost at the lowest point of the curve for Bank of India. And I would probably believe that it's always better to try and ride the trend on the upside. In case if you're a bit iffy about the market trend, near-term market trend, then what I would suggest is maybe take out 50% of your profits. That should probably bring back capital to your on the stock price back to you, and let the profits run. Because I think if this PSU banking rally shapes up into another leg of uptrend, maybe after this phase of consolidation or correction, then I think many of these PSU banking stocks could go into a very strong uptrend. And I've been bullish on the PSU banking space over the last many months as well as many quarters. So I would continue to be that for Bank of India as well. And I would probably sense that maybe book out 50% profits over here, but then look to redeploy in case if the stock gets into a correction, as well as hold the balance for a longer term view.
Right. Let's just keep it a bit with the banks. And Rajesh, we have this query from Ramamurthy from Bahrain. They want to know, is it the good time and a right price right now to invest in something like a Canara Bank, Bank of Baroda, and also they put in VATech Wabag. What is your view on this?
Three are very good investment bets, I would say, especially Bank of Baroda and Canara Bank. They can give very good returns in the banking space as such, although they have run up quite a lot. But the kind of numbers they have reported in the recent past, the cleaning up of balance sheet, higher profits and lower provisioning, lower NPS, I think all of them, they are suitable for PSU banking space. In the larger cap names, you have selected quite a good name, Bank of Baroda, Canara Bank. Or in a mid-cap space, I can suggest you Bank of Maharashtra. That's also very good. As far as VATech Wabag is concerned, it's one of the best play in water treatment business. And one can go long on this with the kind of focus of government in water infrastructure and all. This company is going to do well. It has not done anything in the last 2-3 years, but it has the potential to maybe 40-50% upside in the next 2 years.
Okay, so that's the take coming in on both of these counters. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going with all your stock-related queries and moving to the next query. This one, Kunal, is for you. It's coming from Ajay, and they want to know in terms of Ashoka Buildcon as well as Centrum Electronics, are they a good pick in terms of the short term?
So Ashoka Buildcon, I think it's still going into a corrective phase from 115 to 100 so far. Nothing attractive on the charts. I'm not sure the rationale for picking up Ashoka Buildcon. And there are better charts which are available, which are a lot more stable in that sense. Maybe Ashoka Buildcon, if it comes closer to 95, could be a good stock to look at. Centum, I don't track, but then again, looking at the charts, it seems like that the corrective wave has extended for the stock from 1800 to now 1500 mark. It's also in the ASM group, so that could also add to near-term concerns for the stock price. And so I would suggest that you should wait out for both of these stocks. In case if you're looking at a separate bet, then I think I would probably suggest either a Federal Bank or an IDFC First Bank at current levels.
Okay, Kunal, the next query is also for you, because just yesterday we have seen all these financial names buzzing, and one such name was M&M Financial. Anu from Gurgaon is holding 200 shares at a price of 300 rupees, and she wants a short-term perspective in this counter.
See, it's been a very volatile kind of a stock of late, because I've been tracking the stock from the correction from 340 levels for M&M Finance towards the point when the stock was extremely oversold at 280 mark. I remember I think the stock had formed a triple bottom on the hourly charts at those 280 odd levels, and then from there the stock has gone to a recovery. But the recovery is not a classic recovery, because ideally when a stock forms a triple bottom at those levels, we expect the stock to get into a strong recovery. But then it's very feeble recovery. So then it always makes sense to wait out for one confirmation of a breakout. Let the stock break past about the 320 mark. That could be a point where you may look to add also further quantity for M&M Finance, because that would confirm that the stock has reversed its trend on the downside and is now getting ready for a big breakout on the upside.
Rajesh, we have Ajay from Delhi who has a query on Medanta. They want to know, in terms of fundamentally, how is Medanta looking to invest at the current levels for the next 2 years if they're willing to hold it?
You're talking of Medanta or Vedanta?
Medanta, Global Health.
Okay. That's a very good stock, I would say. The company has been doing well. Average revenue per operating bed has gone up. They're going for expansion. The numbers have been very good. Of late, it has gone for a very long period of consolidation in the range of 680 to 700 odd levels. But that's on the technical side. But fundamentals are very strong. One can buy at these levels and hold for a target of maybe 800 plus levels in the next 1 year.
Okay, that's the take coming in on Global Health. And Rajesh, what's your take on Bank of Maharashtra? Ramesh from Kochi has bought 1,000 shares of this counter at an average price of 33 rupees. He's a long-term investor and can hold for the next 2 to 3 years. Wants to know, should he go ahead and add more at current levels?
We have been very bullish on Bank of Maharashtra. Even today, sometimes back, I have recommended this as a stock for 1 or 2 years. This bank is one of the best bank in the PSU space in terms of numbers that they have reported in the last 2-3 years. On all parameters, be it deposits growth, loan growth, the bank has done very well. Net NPAs is just 0.28%, and that's very comforting for a PSU bank, I would say. The numbers have been good. This quarter, they have reported 95% jump in bottom line. I think this stock can be bought at these levels also, despite the fact that it have run up around 50-60% from its recent lows. But we have a target of around 60 odd rupees in the next in this bank in the next 1 year or so.
Okay, surely keeping an eye out on that one. But let's also mark some of the flashes that were coming in on your screens as well. And that was mainly related, I believe, to the Federal Bank as well. So we are going to keep an eye out on that one. Let me pull up actually what the flashes are saying right now. They were in terms of HDFC, AMC as well. So let's keep an eye on that one. I'll pull up the flashes till that time. But till then, I'll just go to the next query by the time I get the flashes. We have the next query, Kunal, and this one is from Pratiksha from Oman. And she has a query that is on a Blue Star. She's making a profit of 14%. Should she continue to hold this, or maybe book some profits out? What is the view on this?
Yeah, book some out and look to buy back again on the lower side, because I think after yesterday's move for Blue Star, it seems to be that the stock is getting into an exaggeration or maybe overbought. That's a better word to use for stock prices. But maybe the stock may not correct very sharply also on the downside, because after such a kind of a strong up move, the stock tends to generally get into a second leg of a breakout. So it's a very short-term adjustment. If you're making profits on the short-term basis, I think look to book out profits maybe closer to 900, 908 for Blue Star, and then look to buy back maybe closer to 865, 870, 75 zone for the stock, because I don't expect a major correction if the trend is actually broken out on the upside for the stock.
Okay, that's the take on Blue Star. But the next query is also for you, Kunal. It's coming from Dr. Seema, and she wants a short-term view on two counters. Firstly is KPIT, bought 1,000 shares at a price of 700 rupees. And she also has NHPC, 5,000 shares at a price of 55 rupees. So what's your take on both of these names?
Both are attractive. KPIT Tech, even though many of the mid-cap IT names are going through the phase of correction, but I think if you purchased at a very attractive price, so I strongly believe that you could probably hold on to the stock. There could be a near-term correction into the stock price even from here on, but I believe that you should hold on to it and let the entire trend play out for KPIT Tech. The stock has been a very good performer. In fact, it's one of the very few rare IT names which has actually come closer to the previous highs of 2021-22 for itself. For NHPC also, I'm extremely bullish. I think the breakouts for the stock in the recent charts have been very attractive. So I would suggest a hold on NHPC as well.
Okay, and just before, like I was talking about the couple of companies we're keeping an eye out on, that's Federal Bank as well as Equitas Small Finance Bank, where RBI has given an approval to HDFC AMC to buy up to 9.5% stakes. So on the back of that, we're seeing both these stocks are in focus today as well. Let's move on to the next query, and the next query is on Indus Towers, and this one is for you, Rajesh. We have Sridhar, who has entered Indus Towers at 190 rupees. 100 shares is what they are holding. How is it looking for the mid to long term? Should they continue to hold it?
See, I would say avoid on this counter because this company has not done anything in the recent past, always in the news. Nothing major is happening on the fundamental side also. It's better to avoid such kind of companies. If somebody wants to be in telecom space, a Tata Communication or a Bharti Airtel would be a better bet.
Okay, that's the take coming in on Indus Towers. But Rajesh, what's your view on Tube Investments? Bichaka from Kolkata is holding 10 shares at a price of 2,644 rupees, and he also has 10 shares of InfoEdge at a price of 3,800 rupees. In Tube Investments, having decent profits as well as in InfoEdge, the similar story. Good time to book out profits or continue to hold on. He's also looking to make a switch in Tata Investments. So what will be your advice?
See, taking one by one, I would say book profit in InfoEdge. The counters are run up quite a lot. The numbers have been impressive. The holdings of these companies have done quite well, and that's the reason that we have seen an uptick on the prices. It's time to book profit. As far as Tube Investment is concerned, belonging to the Murugappa Group, its company is doing very well. Even the subsidiaries have done very well. One can hold on to the stock, and any dips in the stock to maybe 2,800 or 3,000 odd levels would be a good opportunity to even add. As far as Tata Investment is concerned, it's a very good buy. The numbers have been good. The holding this company has is doing phenomenally good, and it's trading at a highly discount to its intrinsic value. I think one can add to this too.
Kunal, this next query is from Subrata Mukherjee from Kolkata. They want to know, can they average HDFC Bank at the current price? Given that, we've seen a fall coming in the last couple of days, would that be advisable?
So I think I mentioned this yesterday as well for HDFC Bank that 1535 to 1540 is a very good short-term support. In fact, today also the stock made a low which was at 1537. So exactly at that range of 1535 to 1540. And it's seeing a bounce from those levels towards 1565s. So which means that this is a very strong support for HDFC Bank. Closer you are towards this range for HDFC Bank, the better would be your the risk reward to go long for the stock, and specifically if you're a long-term investor.
Okay, HDFC Bank at a major support, as well as in the last 15 minutes, we are seeing a good recovery on this particular counter. But Rajesh, the next query is also from a long-term investor. RJ Rao is holding Sun Pharma, 100 shares, and he's been holding this counter for the last 6-7 years and having a profit of 40% right now. Would you advise to continue to hold on to Sun Pharma or rather make a switch to any other name?
See, the company has done well in the recent past. The numbers have been comforting. But since you're sitting at a such good amount of profit, I think one can book some amount of profit. And in pharma space, I think Cipla would give you better returns than Sun Pharma in the short term based on their performance and based on the news floating around that the company has been taken over by some other company. So these are 2-3 triggers in Cipla which can give you better returns in the near future rather than going for Sun Pharma. So I would say switch from Sun Pharma to Cipla.
Ritu from Ahmedabad has a query on Alkyl Amines, Kunal, and she's holding 20 shares at a price of 3,500. What is your advice for the short term on this one? Should they continue to hold or maybe look to sell?
I would recommend to hold on to the stock. Now I understand that the stock chart is also very weak. It's been making patterns of lower highs and lower lows. But it said that the recent pickup of volumes which had happened for Alkyl Amines, I think on 29th of August, when the volume had or the big breakout had happened for the stock price in terms of volume and price, that the low of that candle is not broken. So that could probably be one of the major indications that maybe a major bottom could be at place for the stock price. So I would suggest a hold on Alkyl Amines. I'm not suggesting an add, but maybe keep a stop loss of 2,300, 310 on closing basis, and then hold on to the stock at least from a near-term play.
Okay, Rajesh, the next query is from Mr. Hassan, and he's holding shares of Megmani Organics from the past 1 year and currently at a loss of 21%. Wants to know what is the outlook going ahead. He can continue holding on and he can actually continue and add more at this point in time. So, would you advise for the same, and what's the outlook?
Due to hold, the company has gone through some bad phases because of that lull in the chemical sector as a whole, which we have witnessed in the recent past. The last 2 years has been very bad. But going forward, I think things have started moving up. One can continue to hold. As far as new money is concerned, I think one can buy Make Money Fine Chem, that is being renamed as Epigrel these days. This company is big in caustic and all, and the numbers have been very good recently. Caustic prices have gone up. So instead of going for Make Money Organics, one can go for Make Money Fine Chem, and that is Epigrel, renamed now.
Right. Rajesh, I'm going to come back to you because we have one more query on the long term. This is from Venkat and this is on Zen Technologies. They hold 120 shares at an average price of around 827.5 rupees per share. They are seeing a bit of a loss as of now in terms of what they have purchased at, obviously. So, should they look to average it or maybe just continue to hold this and keep it holding for the long term is what they're looking at?
Continue to hold. The numbers have been good. The recent order book is also good. But as far as adding to this is concerned, I think it won't be a better strategy because larger names like Infosys or a TCS are quoting at a much lower valuations than what Zentech is. So if you want to put new money, you can go for larger names like Infosys, Tech Mahindra or a TCS.
Okay, so that's the take coming in on Zen Technologies. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back and we'll keep taking all your stock-related queries. Welcome back to Buy Now, Sell Now on ET Now show, where we get you answers for all your stock related queries. And continuing the same, the next query that I have is on Engineers India. And Rajesh, let me take, okay, this query is directed specifically to Kunal. And Kunal, the viewer name is Arvind and he's holding 5,000 shares of Engineers India at a price of 160 rupees. Wants to know, continue to hold on or book loss at this point in time, because it seems like that the stock is consolidating at these levels.
It's consolidating, it's correcting, and again, the entry price over here matters quite a lot. So I think you've purchased at the extremely high end of the price trends for Engineers India. I would probably suggest that at current levels, the stock chart looks a bit weak, and in that sense, you may probably expect the stock to even drag down towards 135, 140. Which means a potential correction of at least another 13-14 rupees. That's closer to, I think, 9%, 10% for the stock price is what you can expect from current levels. But that could actually be a good zone to buy the stock and hold on to it from long-term play. So I would suggest maybe adding another couple of thousand shares for Engineers India so that you can bring down your cost price from 160 to maybe 150 odd or so for the stock.
Rajesh, we have the next query, which is from Akhil from Delhi. They want to know on two stocks. One is Clean Science as well as Graphite India. How are they looking at the current price for the long term?
Long term for Graphite India is very good. 68,000 metric ton capacity, 3 plants in India, 1 in Germany, doing very well. And they produce graphite electrodes, which are used in electric arc furnace of steel making. And with a kind of focus on pollution and all, I think electric arc furnace way of making steel is going to be invoked in the recent current going forward. So I think one can add Graphite India at these levels for a 20% potential upside in the next 1 year. It's a very good buy. And the next one is Clean Science. That's also doing very well. Recently, as we all know, chemical has been in a bad shape, but the things are improving, and I think this stock can go up to 1600 odd levels.
Moving on then, and Kunal, the next query is from Nagesh from Bangalore, and he's looking to buy Havells 1420 call option for the October series. He wants to know, would you advise to go ahead and enter into 1420 call option?
Well, it could actually be a good bet. I think 1420 is a decent strike for Havells, relatively moderate beta stock, very recently given a breakout, and from those breakout, the stock has already gone through a correction. So I think that could be a good point for in terms of strike. Now, timing could be a concern because I'm not sure whether the markets are going for an immediate bottoming out. But if this pain in the market extends for another 3-4 trading sessions, then you may probably get the timing a bit more better if you can maybe time it in the next couple of days. So it's a good strike, good stock, but I would probably sense that maybe timing may not be perfect at current levels. Wait out for another couple of days. In case if the stock just hangs around at the current levels of 1400, 1420 where it's trading right now, you may get the option a bit more cheaper for the October series.
Right. Kunal, this one more query is coming your way. This one is from Vidya from Chennai. They are a short-term trader and it is on ICICI Bank. Now, they are holding 55 shares of ICICI Bank at a price of 900 rupees. Is it time to maybe book out get out of the stock or maybe continue to hold it for some time?
See, short-term wise, it's very difficult to anticipate that which side ICICI Bank would get into a breakout, because it's been almost I think if I'm not wrong, some 5-6 months that the stock has not given a breakout. It tried to come back above that 1000 levels for the first time, but then it was just very momentary for the stock price and it succumbed under selling pressure. 920 approximately has been a good support for ICICI Bank. So largely it's been to this 8%, 9% trading band for ICICI Bank. It's a very good stock if you hold on to it from long-term play, and since you bought at lower levels, I would suggest that extend your time horizon rather than getting out of the stock and then parking your money into any other mid-cap name. ICICI Bank is definitely a quality stock. You should hold on to it from long-term play.
Okay, moving on, and Rajesh, the next query is from PVN Rao from Hyderabad, and he wants a long-term view for the next 2 to 3 years on two counters. Firstly, Som Distillery, should he go ahead and enter this name? And wants your advice on Torrent Pharma as well. How is this stock looking? Because you just talked about Cipla, and the only name that is getting closer to the likely deal is Torrent Pharma. So what will be your take on this one?
See, Torrent Pharma is good company, no doubt on that. The fundamentals are strong. The product profile is very good. The company has been doing very well. The NDAs filed are in a large number. Whether they get Cipla or not is another story. But on the current fundamentals also, it's a very good company. One can go long on this. And the other one which you said?
Som Distilleries.
Sorry?
Rajesh, he wants your advice on Som.
Right.
Yeah.
Right. I think it's run up quite a lot despite not that good fundamentals. The company is expanding, but the numbers have been not that good and the fundamentals are already discounted in this price. So it's better to go for better names like United Distilleries or United Breweries or even Radico Khaitan, better names.
Okay, on that note, viewers, let's get started with the rapid fire. And Kunal, the first one coming your way. This one is from Suresh from Kerala. They're holding 150 shares of Shalby at 182 rupees. Should they continue to hold or maybe look to advise?
Book profits over here at current, then look to buy back closer to 200 levels.
Okay, Rajesh, what's your advice on IndusInd Bank? Kishore Bajaj has purchased 300 shares at a price of 1700. Continue to hold on or move out?
Continue to hold, or if your funds allow, you can even add.
Kunal, Ashish from Noida wants to buy KPIT at the current price for the short term. Would you advise that?
Not for the short term, only if you're long term investor, then you can start at current levels and buy in a staggered quantity.
Okay, Kunal Shashwat from Delhi wants to know PFC that is under pressure. So what is your advice on this one? Any level that he can go ahead and enter this counter?
You can start at current levels of 230 and then look to add closer to 220 mark. Keep a 5% band to add quantity for PFC.
Okay, we have Syamala from Hyderabad, Rajesh, who's holding Schaeffler at 40 shares at 2,951 rupees, which is the average price. What should they be doing? Continue to hold this for the long term, maybe look to average it out. What's your view here?
Continue to hold. Averaging is not advised at this point of time, but one can continue to hold.
Okay, Kunal, what's your view on Andhra Sugars? D. Majumdar is holding 1,000 shares at a price of 176 rupees. What's your view? Will this move on going ahead?
Hold on to the stock. Don't add at current levels.
Rajesh, we have Karun from Delhi who wants to know what should they look to invest in for 3 to 4 years, whether Chola Investment and Finance Company or Chola Financial Holdings?
Both are good. For long term, one can go for Chola Holding. That's a holding company of the group and doing very well. I think one can buy this, but only the problem is volumes are very low. But since you are a long term investor, you can continue to buy at this point of time.
Okay, Rajesh, Coromandel Engineering. Raja wants to know, is this a good stock to invest for the medium term?
Coromandel International would be a better bet, but still engineering is also good. But again, the volumes are very low, so comfortable with that, you can buy.
Okay, and with that, that was the last query for today. So thank you so much, Kunal, as well as Rajesh, for joining in with us, and as always, solving all our viewers' stock-related queries. And with that, viewers, we are absolutely out of time on this edition of Buy Now Sell Now. It's a goodbye from Shrishti, myself, as well as the team who put this show together.